Hi, my name's Josh Mahony, Chief Market Analyst at Scope Markets. Let's look ahead to the upcoming ECB interest rate decision taking place on Thursday, the 11th of April. Certainly, this should potentially kickstart the rush towards the finish line as we prepare for a potential shift out of this tightening phase and the higher for longer phase, and instead into one where we see interest rates being cut. There's question marks around the Federal Reserve. Less so for the likes of the ECB and the Bank of England. Let's look first and foremost at things from an inflation perspective. We can see the inflation currently lies at 2.44, with the last monthly reading coming in at 0.76. That was below estimates, but still a pretty hefty monthly figure. And it's notable that we have been seeing gradual month-on-month increases of late. Notably, that comes alongside energy prices. As we see energy prices rise, we're seeing increases to those monthly readings for the likes of the US inflation. And as we can see here, Eurozone inflation seeing a similar trend. But nonetheless, if we look in terms of the 11-month annualized figure, that lies below 2%, which means that if we see a figure in line with the average that we've seen over the course of the past 11 months come into play next time around, then they would have done their job and inflation will be back at target. That may not necessarily be the case for core inflation, though, as we can see here, which is still a tick above 2.12 on that expected. So on the annualized reading, 1.1 was the figure on the monthly basis. But as we see, generally, we do see these sort of bigger numbers around the sort of beginning of the year, as we saw last year was the March figure from last year was the sort of big outlier, the big number, and we've seen it once again for March this time around. 2.95 is the headline reading, but as we can see here, the expectation is that we will see a move back down to target soon. I don't necessarily think that we're going to see it next time around, next month. Despite this annualized figure saying that, because if you look, if we're just looking for an average figure, well, we haven't necessarily been posting average figures over the past couple of months. We've been seeing pretty strong figures. So nonetheless, I think there's a good chance we see further declines on that inflation front. And so the ECB do have that to look forward to, the potential return to target in the very near future. That, by and large, means that we're going to see interest rate cuts soon, but it is likely that we will see them hold off this time around. We can see here the three sort of key rates that everyone's looking out for. 4.5, the refi rate is the sort of key one that everyone's going to be looking at in the middle here. But before long, we should see things turn around following that dramatic surge in terms of interest rates from the ECB alongside many of the other central banks. It's time for us to start to see that reverse, and that should provide some optimism for markets. In terms of expectations for this meeting, 93% expectation, according to the London Stock Exchange Group's Icon platform, 93% chance of a rate hold, just 7% for a rate cut. That, by and large, means that we won't see a move this time around if they are correct. And instead, everyone looks towards the June meeting with a just 11% chance that we keep rates steady on that occasion. And instead, everyone's really looking for that 25 basis point move to kickstart the easing process. And from there on in, it's a case of looking out for how much we could see over the course of the year. It looks like the expectations are now pointing towards 3 rate cuts over the course of 2024. Of course, that alongside the Federal Reserve expectations have shifted pretty significantly. But whereas the FOMC might have to just keep standing put as inflation is going to be a lot more difficult for them to drive down, I think it's much more likely that we will actually see these rate cuts come to fruition for the ECB this year. In terms of some of the charts to watch out for, let's start off first and foremost with the DAX. I'm going to go full screen here. We can see the DAX rallying in towards the back end of last week with the US jobs report coming into play and trying to continue that trend. I mean, what I would say here is that we've seen this very convincing uptrend in play. Let me get onto the daily time frame. And to show you, we've seen this big uptrend back in sort of November coming into December, consolidation for a couple of months, big uptrend, and now we've broken down through trendline support. So the question mark is, is this going to be another protracted period of consolidation, or is this going to be a short-term move before we push higher? Well, the tone from this meeting and the way that they set out their expectations for that June meeting should be really key here. If we see them essentially lay out a plan to cut interest rates in June and that they feel confident that they're going to continue to cut throughout the year, that should provide a boost for this index and could point towards a exit from this sort of pullback phase that we have been seeing, and instead moving into another record high before long, which would mean a move through this resistance level that we have here, 18649. As things stand, we haven't seen that though. We continue to trade within this short-term downtrend, and so look out for 18419, which is your 76.4 Fibonacci retracement up ahead. But ultimately, what we need to see here is a move through 18501. If we break through that swing high, then essentially this ABC style retracement phase looks to be over and we're likely to head into record highs. I would caveat that with the fact that I think markets are going to be a little bit cautious around the release of the US inflation gauge because it looks likely to move higher. And so the DAX really has to weigh up whether it just cares about what's happening in terms of Eurozone interest rates or whether it's going to go with the wider consensus. If we see a risk-off move coming into play, the DAX is likely to also, due to its correlations and international focus, also likely to feel that impact as well. But certainly when we move into Thursday and we have this ECB meeting, I think there's a good chance that we do see a dovish slant coming through, and that should be relatively bullish for European stocks. In terms of the euro, we have actually seen the euro trying to regain ground of late. It's been faring relatively well. This is it against the US dollar. We've seen a sort of sell-off coming into April, but since then a sharp move towards the upside, a pullback, and now looking to potentially break higher. So in actual fact, this looks like we could possibly see some further upside over the near term. And, you know, I mean, I think personally there's a good chance that we see dollar strength around that US inflation gauge, and that could lead into a sort of picture of weakness for the ECB meeting. So I wouldn't necessarily want to be long of this market, but I'm just saying that, you know, as things stand, it's been sort of consolidating over recent months, and we're looking relatively bullish at the moment. Perhaps this is just laying up for another sort of wider retracement. Let's just grab this. So you've got this sort of move here and a possible retracement of this sell-off here. So you'd be looking up at sort of 108.9 resistance, that's 76.4, and then as we've tagged at the moment here, 108, what's that, 108.6 essentially, which is the 61.8, which has been respected thus far. So that's an area where we could potentially see the bears coming back into play. But if we want to look at the sort of wider spectrum of markets, let's see exactly where we've already started to see the euro weaken. And I would say that arguably the more interesting ones come with the likes of the Australian dollar and the New Zealand dollar. In particular, this Aussie dollar chart, you can see looking like it's rolling over here. So I've just grabbed that here. This is the daily time frame. So from a wider perspective, we can see, again, we haven't necessarily got a huge trend in play. We have a lot of consolidation, really. But the breakdown recently through this support level, which is pretty much where we're trading at the moment, which is 1.644, that points towards a possibility of further downside to come. And certainly if we come into play with a dovish, very dovish tone from the ECB, that can further push this currency pair lower. So if we break up through this most recent swing high of 165.055, then, you know, you wouldn't necessarily be looking for that follow through, and instead you could say, oh, well, this is a fake out because we broke through support. People might be looking at this as a sort of complex head and shoulders formation, but instead we failed to break through that and we broke back up through resistance. So if we break through the 165 level, then I wouldn't necessarily be looking at this in as much of a bearish view. But until that happens, I think near-term upside could be short-term in nature as we lead into that ECB meeting. Remember, we've also got the RBNZ decision in the lead up to that ECB meeting, and the high correlation between the Australian dollar and the New Zealand dollar should mean significant volatility there. But I think that they're going to take a more patient approach compared to the ECB, which again should help us in terms of looking for weakness for this pair. So looking out for Euro Aussie as a key currency pair alongside Euro dollar as we rally up in towards trendline resistance, and the DAX, which has, of course, been on a rip so far this year, but we've seen some recent signs that we could be taking some heat off of it. Will the ECB manage to light a fire under the DAX once again? Well, time will tell. Let's watch out for it when we see this release coming out later on in the week on Thursday.